Imagine building your entire livelihood on a single device, and one day the rules change so sharply you might lose everything. That is the sudden crisis facing hundreds of thousands of point-of-sale (POS) agents in Nigeria as the Central Bank of Nigeria (CBN) rolls out new regulations that could render up to 40% of operators jobless almost overnight. What's the new CBN policy about? Based on reporting, the Central Bank of Nigeria has issued stricter rules and transaction limits governing how POS agents and agent banking must operate. Key components include daily transaction caps on cash-outs by POS agents, for example, maximum cash-outs allowed per day. Tightening of customer daily limits, cash withdrawals or cash-outs, via POS/agent banking channels. Usage of designated accounts or wallets tied to the principal financial institution. POS agents are no longer allowed to use non-designated or ad hoc accounts. Violations attract sanctions. These changes are part of a broader effort by the CBN to regulate agent banking, increase oversight, prevent fraud, and ensure financial integrity. The stakes: who might lose, who might be stranded. These regulations are not just technical adjustments, they have wide implications. Job losses. The Association of Mobile Money and Bank Agents, AMMBA/AMBAN, warns that around 1.4 million POS agents may lose their livelihoods if these limits remain strict and unadjusted. Rural/underserved areas, where banking infrastructure is thin and POS agents often serve as informal banking for many people. These policy shifts may disproportionately affect agents there. Lower transaction volumes, less predictable demand, and infrastructure challenges make compliance more difficult. Agents who move their machines, intentionally or out of necessity, or who operate mobile terminals might be locked out of service under geotagging rules. That affects flexibility and reach. Why CBN says this is needed? The CBN's rationale includes tackling fraud and financial crimes. POS fraud, laundering, and other misuse have reportedly become more common. Geotagging and fixed terminal locations help in tracing and oversight. Improving transparency in agent banking transactions. By requiring dedicated accounts/wallets, the CBN can monitor transaction flows better. Protecting consumers. Limiting how much cash can be withdrawn daily, or how much cash-out agents can handle helps reduce risks for both agents and customers. The pushback. Why agents are alarmed. Agents and their associations are distressed, and here are their main concerns. Economic viability. With caps on transactions, many agents argue they won't make enough to cover costs, machine maintenance, power, connectivity, rent, etc. For some agents, the business may no longer be profitable. Disruption in cash-dependent communities. In areas where cash is still dominant and digital banking is less accessible, POS agents are crucial. Limits or shutdown of service can hurt people's access to cash and services. Technology and infrastructure hurdles. Geotagging, stable internet, power supply, fixed locations. These are harder to guarantee in many rural/semi-urban regions. Agents say these rules don't always account for real-world constraints. Time to adapt. Some rules have immediate effect. Others are to take effect later. But transitions aren't always smooth. Capital outlay for compliant machines, location tracking, etc. may be burdensome. What happens if agents go out of business? If 40% of POS agents are sidelined, several knock-on effects may follow. Reduced financial inclusion. POS agents have been instrumental in delivering financial services to communities far from banks. Loss of tens or hundreds of thousands could reverse gains in inclusion. Cash scarcity. For many people, POS points are the nearest cash access. Reductions in effective POS operations could force people to travel farther or rely more on informal solutions. Increased costs/longer queues. With fewer agents, demand may outstrip supply. Agents that survive may increase charges to make business work, passing costs to consumers. Trust and usage drop. If POS operations become unreliable, people may shift back to lower trust or riskier informal financial practices. Possible alternatives, adjustments, and what agents are asking for. The agents' associations are not asking to scrap the new rules entirely. Rather, they seek revisions or exceptions for rural areas ***, lower minimums or more flexibility in regions with lower transactional volumes, grace periods or phased implementation to allow agents to upgrade machines, power/GPS, etc. Support/subsidies for compliant machines, geotagging, power backups, etc. Clear communication and transparent enforcement, so agents know which rules apply when and how to avoid sanctions. Bigger picture, policy tightening, inclusion, and trade-offs. This policy fits into larger trends. Regulatory tightening in digital/agent banking as usage grows. As POS transactions scale, so do risks, and regulators are pushing back to manage risk. Balancing financial inclusion with financial security. There's a tension between opening access and ensuring integrity, preventing fraud, misuse, or money laundering. Technology's double role. It enables POS service proliferation, but compliance, geotagging, tracking, stable internet depends heavily on infrastructure and investment. Policy risks. Rules like these need to anticipate unintended effects. Excluding marginal agents could undo inclusion achievements, create black market cash flows, or push people into less regulated channels. Possible outcomes and what to watch. Will the CBN modify or soften some requirements, transaction caps, geotagging flexibility, in response to agent pushback? Will technology providers or fintech firms provide help/support for agents to comply, hardware, software? How many agents will actually stop operating? Will 40% really be affected? Or is that projection exaggerated? Final thoughts. The new CBN policy may very well mark a turning point in Nigeria's POS/agent banking sector. It could weed out bad actors, reduce fraud, strengthen regulation, but it could also leave many agents unemployed, especially in underserved areas, if not handled carefully.
Thanks for watching. If you enjoyed this update and want to stay informed with fast, reliable news, don't forget to subscribe to Newsflash 360. Hit the notification bell so you never miss a story. Your next headline is just seconds away.